WYS and the number 3, not the.
Faces for radio, voices for the deaf.
Look forward to talking to you.
Hey, I'm audio candy. I don't know about you guys.
Welcome, everybody. I'm Dawn Garcia of ATOD Magazine, and this is my brand new show, A Taste of Dawn, where we'll talk about everything related to savoring life. You can catch me on rantradionetwork.com every Tuesday and Thursday from noon to 1, where we're going to discuss food and wine, arts and entertainment, music, travel, leisure, and anything in between.
Looking for a delicious, fresh family meal that's ready when you are and easy on your budget? Welcome to Piara Pizza. We make our pizzas with handmade dough, 100% real cheese, and tomato sauce blended with our own spices. Nothing is ever frozen. We always have large pepperoni and cheese pizzas fresh and waiting for you for only $5. Or choose one of our specialty pizzas. We have veggie, meat lovers, supreme, and Hawaiian. Add an order of our amazing hot wings, cheesy bread, or breadsticks. Our locations are ultra-modern, ultra-clean, and open 7 days a week. Visit any one of our locations today, or check us out on the web at www.piarapizza.com. Piara Pizza. Fresh, hot, and ready for you when you come in. Stop in for your Piara Pizza today.
This segment has been brought to you by Coco Cafe. It's a cafe latte coconut water with espresso. And I came across this wonderful little drink just recently, and it has to be one of the best things I've ever had. I'm pretty obsessed with cocoa water and espresso, so the thought of it together was a little bit, I wasn't sure what I was going to get, but my gosh, let me tell you, it's super tasty. It's made with natural coconut water, a strong shot of espresso, and a splash of reduced fat milk. You can visit them online for more information at drinkcococafe.com. Once again, I want to thank everyone at Coco Cafe for being a sponsor of this radio show. Thanks so much.
Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Welcome back, and thank you for joining me. If you have any questions, give me a call at 855-693-4897. We're on the Rant Radio Network, and I want to hear from you. I was talking about taxable and non-taxable income. And again, what the difference between the two. Taxable income is income that you are going to report and pay taxes on. That is your wages, interest, or dividends, something like that. Tax-free income is like tax-exempt bond. So it would be a California bond, and that is tax-free. While you report it, you do not have to pay taxes on it. But non-taxable income is income that you do not have to report. So you don't have to show that anywhere at all. And if asked, it's non-taxable. And we were talking about, we started off with child support payments. They're not taxable to the person receiving them. Unfortunately, they're not a tax deduction for the person paying them. The next one we started on before the break was gifts and inheritance. If you give someone a gift, and you can give someone up to $13,000 tax-free, and they do not have to report that income. That is non-taxable. Unfortunately, you cannot deduct that income. If you give them more than that, that could be a taxable situation on your part. That may mean you might have to file a gift tax return. But if it's $13,000 or less, you do not have to. If someone leaves you an inheritance, let's say someone's left you a house, you sell that house, now that could be a taxable event. So you may have to pay tax on that. However, if someone leaves you $10,000 or $500,000, that may not be taxable to you because the taxes are paid on their end when they file their last return, the estate tax return and so on. They're paying those taxes, therefore you do not have to. Let's take this call. Hello? Hello? Are you there? Hello, are you there?
Hello.
Hey.
Mr. Sykes, good evening. I have a question. Is there an age requirement in order to start doing taxes here in California?
Yes, there is. Before IRS put on a requirement, you had to pass a test, a C-Tech test, that is, show a competence in taxes, and you had to have at least 15 hours of continuing ed. So you had to get a license in order to file taxes or prepare taxes in California. There were 5 states before that. Now, IRS in the last couple years, and that right now is currently in a dispute, has also forced, and that's the part that is in court right now, anyone who prepares taxes who is not an attorney, an enrolled agent, or a CPA, they have to be licensed by IRS, and they have to take 2 tests. One to show they're competent in personal returns, and another to show they're competent in business returns. But that part is, right now, it's in court. But California, you do have to be licensed.
Okay.
All right.
Thank you.
Okay. Okay. Now, welfare benefits. If you are on public assistance, and we're getting back to what is taxable and non-taxable income, if you receive an assistance check, then that is not taxable. So that's money that you have for the family. That's money that the government gives you for your subsistence, and that is not considered, that is non-taxable. You do not have to report that on your tax return. Now, a damage award or injury for physical injury or sickness. Now, that one you do not have to report. However, if part of that award is for punitive damages, then you do have to report the punitive damages. So let's say you were in a car accident and you went to court, you sued the person for back wages, for pain and suffering, and then punitive damages, and you received $30,000 for back wages. That's going to be taxable. If you received $30,000 for punitive damages, that is, they were negligent, whatever, that's going to be taxable. And the remainder of that $100,000, which would be $40,000, that was for your pain and suffering. That would not be taxable. Now, since attorneys were involved, whatever you paid to that attorney is actually a tax deduction. So be aware of that. It's not that the whole thing is taxable to you. It is only part. And your attorney should be able to help you. If not, then you need to talk to your tax preparer. The next thing, a cash rebate from a dealer or manufacturer for an item that you buy. So let's say you received a rebate coupon. You bought a computer and it says you get a $100 rebate. So you paid $800 for the computer. It's really $700 once you turn in that coupon, and they send you back a check for $100. That $100 is non-taxable. Basically, it's a discount for that computer. The computer really costs $700, but the company wants to take a tax deduction by offering discounts, so you have to do something. If you don't do something, you've actually given that company an extra $100. And the last one is a reimbursement for qualified adoption expenses. Now, a lot of us don't get into adopting, but that's something. Let's take this call here. Hello, this is Anthony Sykes. Who am I speaking to?
Hi, you're speaking with Carlos from Maywood.
Hi, Carlos. How are you? Thank you for
Good,
calling.
and yourself?
I'm doing well. Thank you.
I had a personal question when it comes to taxes. Does immigrants or Mexican people that are not legal here, do they have to do taxes?
Well, okay. Let me answer that in two parts. The first part, everyone is required to file taxes, whether you are a citizen or not, if you've earned money in this country. Now, if you want to hope to become a citizen or get your green card, that's one way of doing it. It shows responsibility. You can get an I-10 number, and then by having that, start filing. IRS, by law, will not report you to immigration. So they don't pass that information on to anybody. Their objective is to collect taxes, but you then can take your copies of your tax return to an immigration attorney, and that can help you on your way to becoming a citizen or a resident alien. That's my understanding of the law.
Okay. Now, another question. Well, I haven't done taxes in a while. Would that hurt me in a way?
That can hurt you. One, because if you've done, let's say the last time you filed was 3 years ago, and you haven't filed for the last 2, IRS has record of that. They may be thinking you to be a non-filer. That's not a good thing. So I would advise you consider filing those other years. We deal with what happens, but it works to your advantage.
Okay.
Okay?
Okay, thank you very much.
Thank you. Hello, are you there? Hello? Oh, okay. Now, getting back to the last one, reimbursements for qualified adoption expenses. If you adopt a person, if you adopt a child, and that's anywhere from an infant up to the age of majority, which is 18, you can get a credit for the adoption. However, if some of those expenses are reimbursed back by the agency you are adopting this child through or whatever, those are not considered taxable. They are not. That's non-taxable income. So it helps you. That's something that IRS put out so that it helps us to adopt. That's the rationale behind that. I can't think of anything better. Now, income that may be taxable or non-taxable, insurance proceeds. So if you have an insurance policy, and let's say someone takes out a policy, and your wife takes out a policy on you, and you pass away, those insurance proceeds could be non-taxable. She doesn't have to report those. However, if you have an insurance policy through work and you are paying those proceeds, and it's after tax, it's a deduction from your paycheck, and you pass away, those proceeds may not be taxable. But if the company is paying for you, they could be taxable. We'll talk a little bit more about that after the break. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.
Hi, I'm Aaron Michael Sanchez.
And I'm Kelly V. Dolan.
And we are excited to announce our show Live with Aaron and Kelly is on Rant Radio Network. What do we talk about on our show, Kelly?
We talk about everything from entertainment to business and tech, and we have a few laughs in between.
That's right. Go check us out on rantradionetwork.com. That's rantradionetwork.com.
Check it out.
We are the Three Guys every Monday live from 6 to 7 p.m.
You can call us at 855-69-THE-3-GUYS.
It's not the Three Guys. This is why you should turn in, because one has Tourette's, the other one's illiterate.
You really should listen in. You never know what's going to happen.
855-69-3-GUYS, G-U-Y-S, and the number 3, not the.
Faces for radio, voices for the deaf.
Look forward to talking to you.
Hey, I'm audio candy. I don't know about you guys.
This segment has been brought to you by Coco Cafe. It's a cafe latte coconut water with espresso. And I came across this wonderful little drink just recently, and it has to be one of the best things I've ever had. I'm pretty obsessed with cocoa water and espresso, so the thought of it together was a little bit, I wasn't sure what I was going to get, but my gosh, let me tell you, it's super tasty. It's made with natural coconut water, a strong shot of espresso, and a splash of reduced fat milk. You can visit them online for more information at drinkcococafe.com. Once again, I want to thank everyone at Coco Cafe for being a sponsor of this radio show. Thanks so much.
Looking for a delicious, fresh family meal that's ready when you are and easy on your budget? Welcome to Piara Pizza. We make our pizzas with handmade dough, 100% real cheese, and tomato sauce blended with our own spices. Nothing is ever frozen. We always have large pepperoni and cheese pizzas fresh and waiting for you for only $5. Or choose one of our specialty pizzas. We have veggie, meat lovers, supreme, and Hawaiian. Add an order of our amazing hot wings, cheesy bread, or breadsticks. Our locations are ultra-modern, ultra-clean, and open 7 days a week. Visit any one of our locations today, or check us out on the web at www.piarapizza.com. Piara Pizza. Fresh, hot, and ready for you when you come in. Stop in for your Piara Pizza today.
Welcome, everybody. I'm Dawn Garcia of ATOD Magazine, and this is my brand new show, A Taste of Dawn, where we'll talk about everything related to savoring life. You can catch me on rantradionetwork.com every Tuesday and Thursday from noon to 1, where we're going to discuss food and wine, arts and entertainment, music, travel, leisure, and anything in between.
Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Welcome back. And again, you're on Rant Radio Network. Give us a call. I want to hear from you. 855-693-4897. And you can call my office for a free consultation, 562-864-2341. Thank you. Now, we were talking about taxable and non-taxable income. Again, taxable income is income like wages, interest, dividends. You're going to report that unless specifically you don't have to, and very rarely that happens. Non-taxable is, let's take this call first and we'll talk about it a little bit later. Hello, Teresa? Hello?
Hello?
Yes, Teresa?
Yes, this is Teresa. How are you?
I'm doing well. How about yourself?
Good, too. Just have a quick question.
Sure.
Last year I got married in July.
Okay. Congratulations.
My husband's not a U.S. citizen, so I want to know how can we file for an ITIN number? Because this year barely going to file for his papers.
Okay.
So, what will be the step for me to, or how will taxes work?
Okay. Taxes, did he work last year?
Yes, he did.
Okay. Well, taxes are going to be a little complicated for you. To get an ITIN number, it used to be a little easier. You could go to a tax person like myself, and we actually could fill it out and get you an I-10 number. Now you'd have to go to an IRS office, and if you're in this area here, you're looking at going to El Monte.
I live in the city of Corona, so that's Riverside County.
Okay. I think the closest one was Santa Ana.
Okay.
Yeah,
Okay,
you'd go to Santa Ana. Santa Ana's pretty good. And you would bring his information, birth certificate, couple other, passport, something with a picture ID, and you would file for the I-10. A W-7 is what they would fill out for you, and then they would
a W-7. Okay.
and they would assign an I-10 number.
Will that be right away, or they're going to mail it out, or?
Probably they would mail it out. So what you're looking at is you're probably going to file on extension.
Okay.
Yeah, I don't think you can't really file your tax return really quick this year. So if you're looking to,
so if I were to, let's say, start to go on the first week of March, I would have to ask for an extension for this year.
Yes.
It wouldn't be as quick, as
to
get him the I-10 between the month of March.
You might. I don't want to give you no hope. It might happen. You can ask them when you get there, how soon can they turn it around? It may be they've expedited the system. I get emails from IRS telling me how it works. So I know they were trying to speed up the process, but I can't honestly tell you if now they will issue it in right there. They used to.
Okay.
Yeah, but that's kind of the best I can do for you. From there, it becomes a little easier to file a tax return, just as if you're a regular tax return.
Yes, okay.
Okay?
Okay, well, thank you very much.
Thank you.
Okay.
Bye. Okay. Again, we were talking about taxable and non-taxable and the difference between tax-free. Now, tax-free income is that income that you would report on your tax return, but it's not taxed. Non-taxable is that income which you do not have to report at all. You do not have to show. So if there's an audit and they ask, have you received any income that's not on your tax return? Yes. Then you talk about, you say, yes, I have non-taxable income. I have child support or welfare benefits. I've received a rebate. I've received a reimbursement from an adoption or something like that. Now, we were talking before the break about life insurance. There's several ways in which it could be taxable and also non-taxable. If you have two partners and they take a policy out on each other called a key man policy or key man insurance, if the company pays because the company is going to be the beneficiary of it, then it could be taxable. If they pay with pre-tax dollars, that is dollars that they don't pay tax on, then it will be taxable. However, if they're paying the premium after taxes, then it's not going to be taxable. If they leave it to a spouse or something, or someone, not something, I'm sorry, then it may not be taxable. But insurance is an interesting kind of animal. It can be taxable or non-taxable. Let's see. Oh, one of the things I had another call at the break was why do you have to report your tax refund from the state? And you only have to do that if you itemize your return. That is, if you have a Schedule A. If you did not have a Schedule A that was greater than your standard deduction, then you don't have to report any refund that you received from the state. But if you did, let's say you did have a Schedule A with your tax return, you itemized your deductions, and you received a refund, and you had state withholding from your W-2 wages. Now, part or all of that could be taxable, and the reason behind it is IRS says that part of those state withholding helped you get that federal refund. Now, if you didn't get a refund, then it may not be taxable. But if you did get a refund, there's a calculation that takes place of how much of that state tax withholding contributed to your federal refund. And to that extent, that part of the state tax refund is income. And that's why you get that 1099-G from the state every year that says you received a certain amount of income. So again, remember, if you file a short form, you don't have to worry about it. If you itemize, then you have to take that into consideration, especially if you use an online tax software, because it may not do the calculation correctly unless you're using that software year after year, and it remembers what your information was from the year before. Now, I'd like to talk about some tax benefits if you happen to be a parent, if you have children. Well, the first one and the easiest one is if you have dependents, you get to claim them. Now, that seems pretty straightforward. However, if you're married or if you're not married, it's who's going to claim the dependent, especially if you live apart. If there's earlier we talked about what was taxable and non-taxable. That number one was child support payments. So if you have a child with someone and you're paying child support payments, does that entitle you to claim that child as a dependent? It depends on how much other support are you giving. Does the child live with you? Does the child not live with you? And so on. So there's a whole list of questions. Now, I think we have a question on the line here, so let's see what we got.
Mr. Sykes.
Yes, sir.
This is your board man.
Okay.
Quick question.
Yeah.
All right, so now I'm hired by a company, so I'm good, but I have a lot of other friends of mine in this graphic design circle that they work freelance. How are they entitled to doing their taxes? Do they have to do taxes? Because they don't sell anything physically, but they do invoice people for graphic design.
Well, they're independent contractors. And depending, and we talked about it a little bit. I want to talk about it a little more in depth at another time. But the answer, a kind of short answer is, if you receive any income from doing any work, that is taxable income. You must file a tax return. Now, there are limitations or minimums that you must meet. If you made less than $4,000, maybe you don't have to file. However, you will have to file if it was as if you earned that income as an independent contractor. There, by that, no taxes were taken out. You did not receive a W-2. So the difference is, if I earned $4,000 working for Anthony Sykes and Company, I don't have to file because I didn't make enough to meet the minimum for the standard deduction or my dependent exemption. But if I earn $4,000 as an independent contractor from Anthony Sykes and Company, I do have to file because I may have self-employment tax. So what they have to do is keep track of all that money that they've invoiced, and they should receive a 1099. That's first and foremost. The people they work for are supposed to issue a 1099. But if not, they need to report the income that they made and offset that income with any expenses that they may have.
Thank you.
Okay, thank you. Now, talking again, benefits for parents, the child tax credit. If you have a child under 17, and I get this asked all the time, why 17? They're still in school. I still have to pay them, but we'll talk a little bit more about that after the break when we come back. Thank you. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.
Hi, I'm Aaron Michael Sanchez.
And I'm Kelly V. Dolan.
And we are excited to announce our show Live with Aaron and Kelly is on Rant Radio Network. What do we talk about on our show, Kelly?
We talk about everything from entertainment to business and tech, and we have a few laughs in between.
That's right. Go check us out on rantradionetwork.com. That's rantradionetwork.com.
Check it out.
We are the Three Guys every Monday live from 6 to 7 p.m.
You can call us at 855-69 The Three Guys.
It's not the Three Guys. This is why you should turn in, because one has Tourette's, the other one's illiterate.
You really should listen in. You never know what's going to happen.
855-69-3-GUYS, G-U-Y-S, and the number 3, not the.
Faces for radio, voices for the deaf.
Look forward to talking to you.
Hey, I'm audio candy. I don't know about you guys.
This segment sponsored by Mucho Macho Michelada. Whenever you got to spice up your beer, Mucho Macho Michelada is for you. Only real men.
Did you say mucho macho?
Mucho Macho, baby, where the real men come to drink.
Hey, I don't always drink michelada, but when I do, I drink mucho macho michelada.
If only Arvin could be a little more Mucho Macho.
Will it put some hair on my chest?
No, but te quema entrando y saliendo.
Welcome, everybody. I'm Dawn Garcia of ATOD Magazine, and this is my brand new show, A Taste of Dawn, where we'll talk about everything related to savoring life. You can catch me on rantradionetwork.com every Tuesday and Thursday from noon to 1, where we're going to discuss food and wine, arts and entertainment, music, travel, leisure, and anything in between.
Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Welcome back, everyone. We're on Rant Radio Network. Give us a call. I'd like to hear from you. 855-693-4897. Your opinion or your question is important. And remember, there are no dumb questions. There are only unasked ones. And because if you don't ask it, you won't get the information you need. And I don't want you to have to make a mistake on your taxes. You can also call me at my office, 562-864-2341. Visit us on my network, on my website, rather. That's at sykesaccounting.com. Sign up for our newsletter. A lot of interesting tax tidbits in there. And hopefully it's fun for you. That's what I try to do, make this show not only informative and kind of fun. I know taxes is really a dull subject, and I'm hoping I'm making it a little bit entertaining, but my number one goal is making it informative so that you understand it. You know what you need to know, and I want to hear from you. I want to know if this is what you like. Now, we were talking about tax benefits for parents. Excuse me. And where we were talking about is the child tax credit. At the break, someone asked me, hey, my child is 17. He turned 17 last year, but he's still home. He's still eating and everything else. He's still in high school. Why did they make it at 17? Excuse me. Well, one of the reasons is it brings in money. If you took it till 18, then IRS would get less money in. So they give you the credit from 0 to 17, and after 17, they consider them to be young adults, not adults, but they could also get a job, and therefore They do not want them to have the credit at the same time earning money. That's kind of the rationale that I've heard it to be, and who knows. Next is the child and dependent care credit. You get a credit if you have the child with a babysitter. Now, unfortunately, the babysitter has to pick up that income. If they don't, you can't get the credit. If you have the babysitting or the child care through your work, they normally pay it, and you have to offset what you're paying, because if it comes out of your paycheck directly before you pay taxes on it, you have to reduce the credit that you receive by what's coming out of your paycheck. So let's say your total bill for child care is $4,000, and your company subsidizes that by $2,000. So $2,000 comes out of your paycheck, and you still pay $2,000 out of pocket. Well, the credit would be based on $2,000 instead of $4,000, because you are getting a tax benefit out of that first $2,000. Also, with child and dependent care, one of the things you look for is if you have a special needs child, you can take that credit for the care that that you have to spend on them, the money that you have to spend throughout their life, as long as they're in your care. Normally, child care credit ceases once they become 18, if you have to, but normally it ceases way before then, when they reach their teens, because no one is looking after them, and therefore, if you do claim it, be prepared to substantiate that, because that can generate an audit. Earned income tax credit. Now, if you earn below $50,270, and that's if you have 2 children or more, if you're married and it's a joint return, whatever, you could qualify for earned income credit. Now, the maximum on that is about a little under it's $5,891. Earned income credit is based upon how much earned income that you've made for the year, and how many dependents you have. Now, going back to what is a dependent, that definition, they have to live with you. And therefore, if they live with you and you're paying the expenses, they can be a dependent. If you claim them, they have to, if they don't live with you and you claim them, that's okay. That could be okay. But if they're not living with you, you cannot get earned income credit. So keep that in mind. Now, you could also have earned income credit if you are earning below this $50,000 amount and receive child support payments, because those payments are non-taxable. You do not report them anywhere. And therefore, the earned income credit is to help you to support the children and yourself to a minimum standard of living. That's what earned income is all about. The adoption credit. If you adopt a child, you can take a credit for it. It's a process to adopt a child. I've never adopted one. I've had clients who do. You go through a lot. It's reported on Form 8839, and you get a credit for that. It helps you to offset the cost and the expenses of adopting a child. The higher education credits, we've talked about that. As a matter of fact, earlier in the show, I said IRS is now accepting that form for higher education credits. Now, there's two types of credits. One is the American Opportunity Credit. The other is the Lifetime Learning Credit. Now, the difference between the two, the Lifetime Learning Credit is you could have graduated. Let's start with the first one. The American Opportunity Credit, you cannot have a 4-year degree. It's really when you get out of high school, you're starting college. So your first, second, third, fourth year in college, possibly fifth, but you cannot get a degree, a bachelor degree. You're still working on it. So whether you have an associate's degree or not, doesn't matter, as long as you're moving towards attaining a 4-year college degree, you can take the American Opportunity Credit. Now, that can be as much as $2,500 as a credit. A credit is something that reduces your tax dollar for dollar. That's something that you really want. Deductions are good, credits are better. The Lifetime Learning Credit is if you have that 4-year degree and you've decided to go for a master's degree or even a PhD, or take some other courses that help you in your job, but not necessarily leading to a degree, but help you to earn more money. There is a credit there. And the limitations on these credits are different. What shows up on your tax return, again, is a credit, and a credit is a dollar for dollar reduction of your taxes. So if you have a $1,500 credit from the Lifetime Learning credit, that reduces your taxes by $1,500. Or if you have no taxes, I believe you get a refund of $1,500 because it is a refundable credit, or can be a refundable credit. Student loan interest. Now, we all know a lot of students have to get loans to go to school. So that interest is deductible. It actually is deductible on what is considered the first part of the tax return, page 1 of the tax return. There's 2 pages of that 1040. Page 1 lists the income items and deductions from those income items, and then you stop at adjusted gross income. And I think in the near future, we'll talk about an actual 1040 so that you can see what it looks like. Page 2 has the deductions and the exemptions and the credits, and also the taxes, additional taxes that you pick up, and it all nets to either you pay additional tax or you get a refund. But going back to student loan interest, it is the interest that you've paid on a loan for your college education or education in a technical school, but that interest is deductible. It is the only interest that you can get outside of mortgage interest. That's how important that is. So it's deductible off the first part of the page 1 of your return. Now, the last one I want to talk about on this is self-employment health insurance deduction. A lot of self-employed people don't realize this. Now, if you are self-employed and you do have health insurance, that actually is a deduction off the first part of your taxes, or first page of your tax return. You have to have positive income. You have to show a profit on your Schedule C, but your health insurance is fully deductible on page 1 of your tax return. So if you have a tax return, these are some things that you need to do if you're a parent. Thank you for the show, the Rant Radio Network. I'm Anthony Sykes. Visit us on the web, sykesaccounting.com. See you next time. Thank you. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.